There's too much uncertainty. I mean, yes, they will survive, and yes, they are low-cost producers, but and yes, they're big in their markets. You know, they're significant players in their producing markets, but the demand side of it is, quite uncertain. You know, with China, certainly its growth profile slowing and changing into a consumption cycle, and the management of that cycle by the authorities. Now, they've been pumping out supply as well to maintain excess supply in the market to compress prices. But now they're seeing that strategy in a slowing economy is not very clever either. So they've got to start conserving their reserves and their income. So I think the battle, there's still 2 or 3 years of battle in some of these big bulk commodity markets. And, yes, you can buy some of these stocks at some price on some yield while you wait. But, you'd be crazy to go chasing, massive stock recoveries, and I think a lot of it's caused by silly headlines. I mean, I think you wake up in the morning and say there's a surge in oil, like it's gone up $3 and it's $33, and the oil price was $120, a couple of years ago. The iron ore price has surged $50 and it was $180. I mean, what's a surge? To me, a surge is getting back somewhere to where we were. There's no surging going on at all. There's just mass speculation in commodity markets. The forward curves are suggesting that prices will be lower in 3 or 6 months' time. That's what we've got to watch. And I think sophisticated investing does that. The only reason you buy equities, you should be buying them on a long-term basis, and you should be looking at their cash flows, which support your cash flow as an owner in terms of dividends. Now, you shouldn't be investing in companies which have a major commitment to pay back lenders before they pay you in a volatile commodity market with a volatile currency. I think it's interesting today that BHP slashed their dividend and the share price is up. If you extend the argument, go into the financial services area, the banking sector, which clearly needs to grow capital, why don't the banks now cut their dividend and start again and stop diluting shareholders? Because the evidence in the market is quite clear. Have a long-term growth strategy well funded by internal cash flows and the market will reward you. Don't listen to short-term speculators. So the banks have got a real decision to make. Now, they will say they don't need to cut dividends. Well, clearly they do, and they shouldn't have DRPs, they shouldn't have share purchases, they shouldn't have hybrid issues. They should be funding their business through profit, retain profit. So retain more of it, get your balance sheet in order and start growing. That'll be the best interest of all shareholders in the banks. And it's so easy to do, and they're so scared about doing the obvious, which is quite amazing. Otherwise, you get to a BHP situation where you've got no choice. You have to cut dividend. So why go there? Yeah. Well, I think it's driven capital management when it shouldn't have. I don't think banks are there to provide yield support to pensioners. They're there to grow dividends over a long period of time for not only current shareholders but for future shareholders. It's a long-term game, and I think. The markets now, I think anyone investing has to take a long-term view. I think we've had a couple of years of fun. Probably it filtered out the second half last year. But from 2012 to 13, where we had PE expansion, not justified by earnings, that game's over. Now we've had, in the last 12 months, continued rally in bonds around the world, but PE are not expanding, they're contracting. Because now the market is realising there's no growth. So PEs are contracting, and it doesn't matter what you do to a bond yield, it's not going to help the share market. That nexus is broken down, which is concerning because it makes it very hard, to take a rational approach to a market which is beginning to act. It might be acting rationally, but it's acting so irrationally for so long, it's hard to work out, exactly where it's going, on what basis it's going there. Yeah.